futures jumped 7%. Not a good omen for consumers. We've got one of the best commodity investors in the world to help us sort out what's going on here and whether to buy or sell commodities. Joining me now, my old pal, outspoken living investing legend, Jim Rogers. He's the chairman of Rogers Holdings. Also with us tonight, just to keep Jimmy honest, Scott Nation, options action contributor and chief investment officer at Nation Shares, and Richard Sultanian, co-president of NUS Consulting Group. Let me start with my old friend Jim Rogers. Welcome back, Jimmy. Okay, so look, commodities got crushed last week, but they rebounded nicely today. What do? Do we go long or short commodities here?
Well, I own commodities. I own every one of the commodities you mentioned and more. I own them all, as a matter of fact, because we're in a major secular bull market, which has several more years to go. There will be setbacks, just as we saw last week, but don't worry.
The CME jacked up oil margin requirements by 25% just a few moments ago. What's that going to mean?
It's going to cut demand for oil for a week or two. You know,
How much? A week or two?
The CME seems to have it in their heads that they've got to make commodity prices go down. I guess they're worried about Washington or something. But in the end, Harry, it doesn't matter. If there's not enough oil, there's not enough oil, no matter what the CME or Washington does.
All right, so let me ask you this. India looks like a slowdown. They're tightening credit. China looks like a slowdown. It's tightening credit. And even Ben Bernanke is going to end QE2 with no QE3. Now, isn't that bearish for commodities?
Well, it may slow demand down, yes, but remember, there's also declining supply. The IEA, the International Energy Agency, says that the reserves are declining at the rate of 6% a year. Do the arithmetic. In 16 or 20 years, there won't be any oil at any price. So supply is going down, even if demand goes down.
But in the shorter term, I mean, these changes in India and China monetary policy, the changes in the U.S. monetary policy, does that not put a floor under the dollar and a ceiling over commodities?
Well, I actually own a few U.S. dollars at the moment for just exactly the same reason.
You own dollars?
I know, it's embarrassing.
You own dollars?
It's embarrassing, I know, it's embarrassing. But I agree that they probably will stop QE2, at least for a while. The dollar's been beaten down by everybody. Everybody's bearish, including me. It should have a rally, so we'll see.
All right, so we'll see. Let's go around the horn. Scott Nations, let me go to you. You heard Jim Rogers. What's your take? Do we buy or sell commodities? And incidentally, weigh in, Scott, just for a second, on the CME margin requirement increase, similar to what bashed silver down last week. How do you see it?
I am not agnostic as to the CME. I am a big fan. But their goal is not to drive down commodity prices. It's not to drive up commodity prices. Their goal is to make certain that margin requirements fit the volatility of the market. And we saw them do that last week in silver. And thank God they did, because the move we saw in silver was apocalyptic. Now, as far as broader-based commodities, you have to be long for one simple reason. The dollar is getting killed, and the dollar is going to continue to get killed. The two-year yield in Germany is 3 times what it is here in the United States, and as long as that's the case, people are going to continue to sell dollars and buy euros, and even with the Greek problem, that is still the way that the trade's going to go.
But Scott, with respect, you heard Jimmy Rogers say, for the first time probably in this century, he's actually owned some dollars. Now, what do you think of that?
I'm going to assume that he was out in the sun for a little bit too long, and he considers this a hedge against his long commodity positions. I don't think we want to read too much into that.
Scott, it's actually because people like you and me are very, very bearish on the U.S. dollar. I'm terribly bearish on the longer term, even medium term, and I know you are too. That's why I'm long the dollar, because there are too many bears.
But Richard, you have a different take on this story.
Yeah, look, Larry, I honestly think that, in the long run, yeah, there's pressure on the oil system, but truthfully, in the short run, there's lots of oil in the system. We've got 360 million plus barrels sitting in stockpiles. The U.S. isn't consuming a heck of a lot more. We're back to 2005, 2006 levels of consumption. Europe has been shedding barrels. Japan certainly has been shedding barrels. The only real demand spot that you can point to is China and India. And as you pointed out, both China and India are trying to slow growth down. And China's oil growth is about, pick a number. If you want to be real sort of optimistic, about 1 million barrels a day per year. It probably averages more about 750,000. That's, we're shedding more of that between the U.S., Europe, and Japan.
And you think oil's going down?
I think once...
And you think these margin requirements are going to help push it down? I mean, margin requirements were one of the contributors to what, a 25% drop in silver last week. Is it possible oil could drop 20%?
It's possible oil could drop pretty steeply as a result of this. But the funny thing is I think what even we're discussing, it shows that there's a lot of froth in the market. It's not fundamentally driven today. And the fact is, yes, I agree with Jimmy, in the long run, should we continue to drive gasoline-powered vehicles, and should China adopt that sort of model that we have, yes, there's going to be a lot of pressure on it. However, that's 16 years away or 15 years away. I think in the short term, there's just a lot of supply.
But Larry, yes, oil could go down 15, 20, 25%, but every market has big fluctuations every year. You look at any stock, and the difference in the high and the low is 35 or 40%. There's nothing unusual.
Well, I get that, and you've worn that down through the years. Doesn't break the trend, but I do want to note today, stocks were up. Energy and materials, commodities did real good. If they fall back tomorrow, stocks are going to fall. And I just want to ask you, what's your outlook? Are you cautious near term for stocks? Could we suffer a correction here in the stock market just as these commodities continue to correct and the dollar improves?
My own portfolios, I'm long commodities, I'm long currencies, some currencies. I'm short stocks, I'm short emerging market stocks, things like he was talking about, Rich was talking about, and I'm short technology stocks in the U.S.
And you're not short the commodity stocks here in the U.S.?
No, I'm long commodities.
Really? So you're going to stick it out?
That's a secular bull market. But look, let's suppose commodities go down. I assure you, emerging markets are going to go down more, and I assure you that technology is going to, I hope I assure you that technology is going to go down more.
Scott Nation, I don't know that I'm assured, but I want to get your own portfolio strategy because I'm just thinking out loud here. The new news, breaking tonight, that the CME is slapping 25% increase on margin requirements, okay, on oil. That's very important. And there are other forces at work. So in terms of the stock market, are we going to see a big decline tomorrow morning on lower energy and probably spilling over into lower commodities? Viewers like to know that. What's going to happen?
I think the stock market will probably open a little bit lower because oil will probably open a little bit lower. And let's face it, with oil up 5% today, the CME probably had to step in. That said, oil is never as speculative as gold and silver. I mean, silver over the past month has been in its own little world. Oil is never that bad. So I don't think that we're going to see some giant sell-off in oil tomorrow. We're not likely to see some giant sell-off in the stock market as a result. But as long as the dollar continues to get beat up, anybody who's buying oil in some currency other than the dollar gets to buy it at a discount. And they're going to continue to do that. They're going to continue to provide a floor for oil as long as the dollar continues to get hurt. One final point, Larry. The dollar needed to get through 75 in the Dixie today. It could not. It actually ended up about 0.75% lower. That's really disappointing.
Richard Sultanian, why are Treasury bonds rallying so much and the yield falling? The yield is down to 3.15%. The Treasury bond market doesn't care about the Washington debt ceiling increase, which is supposed to destroy bonds, according to some notable investors. Why are Treasuries so rich, and why are the rates falling so much?
I think people are starting to lose a little bit of confidence in this rebound. The fact is, you got an ISM services figure that was quite weak. You got a first print on GDP at 1.8%.
Even though the employment on services was quite strong,
yeah,
and the ISM manufacturing was quite strong.
I know you're always pointing to manufacturing. My problem is manufacturing in the U.S. has been shrinking since after World War II. It was 27% of the economy, down to 12. Let it grow. But the problem is, we always say when services are good, the U.S. is rolling. The problem is 70% of the economy is in trouble. Services is not growing as robustly as we'd like. The ISM services figure came in disappointing. And the fact is a 1.8 print on GDP is lousy when everybody was forecasting 4%. So you got that. You got the UK coming in at 0.5%. You've got Japan that's struggling. You put all that together.
Are you buying or selling stocks?
I'm selling.
Selling across the board.
Yeah, look,
indiscriminate.
Not indiscriminate. There's things we like. Don't get me wrong, but we're going to safety. We like the integrated oils in the long run. In the long run, they'll pull back.
Jim Rogers, does Greece decay all these trades? What's the Greece thing going to do to Europe, and what's that going to do to the U.S.?
Greece, I don't even know what that is.
Greece is
dead. Oh, Greece.
They peaked at 450 BC, but they're back again.
They're having a rally. Don't worry. Greece is bankrupt. They're going to let them go bankrupt eventually. I don't know if it's going to be this month, but before the next year or two is over, Greece is going to have to default, and people are going to lose money.
And that may be why treasuries are so strong.
Well, it could well be. It could well be. The other reason treasuries are so strong is there's something like 95% of the people in the world are bearish on treasuries, including me. I would be short treasuries except for that.
And look what they've done.
No, that's why thank goodness I'm not short. And today I started short treasuries. I said, no. 95% of the people are bearish. Don't short yet. Wait.
All right, so you're going to stay with the commodity trade, Jim Rogers.
I'm hedged against I'm staying with commodities, and I'm hedged on short stocks.
All right, very good. Thank you, gentlemen. Jim Rogers, Scott.
I'm not short. And today I started to short the credit. And I said, no, no, no. 95% of the people are bearish. Don't short yet. Wait.
All right, so you're going to stay with the commodity trade, Jim Rogers.
I'm hedged against the, I'm staying with commodities and I'm hedged with short stocks.
All right, very good. Thank you, gentlemen. Jim Rogers, Scott Nations, and Richard Sultani. We appreciate it. Coming up, folks.